Okay, folks, it's 7 o'clock and it's time to get this Farminar going. Thanks for joining us. I'm Steve Carlson. I work with Practical Farmers of Iowa, and I'm in our brand new Practical Farmers of Iowa office in Ames, Iowa. We just moved yesterday across town. Um, but let us know in the chat box where you're tuning in from if you'd like. It's kind of fun to see where people are at. I know we've got speakers tonight. Caleb and Jacqueline are in Osceola. Rod, I think, is up in Minneapolis. So feel free to share where you're at in that chat box. Get used to using that. But yeah, thanks for joining us. A little bit of background on this. Several months ago, Caleb and Jacqueline Shinn posted in the PFI discussion list that their insurance rates jumped way up this year, even after having made no insurance claims. So they were looking to shop for a new policy, and they asked for feedback from other PFI members. And then they spent several months trying to find the right fit. And of course, they got good suggestions from other PFI members in a true Practical Farmers of Iowa fashion. But I jumped right in there too, and I asked if the Shinns would lead a Farminar on their experience shopping for insurance and dealing with risk management. So here we are. And joining the Shinns tonight is Rodney Sebastian with the USDA Risk Management Agency. And Rod was actually lined up to do a session for us at our annual conference back in January, but the day before he was going to present for the PFI community in Ames, the government shut down, and so Rod wasn't able to make it. So it worked out really well that we wanted to cover this topic for a Farminar anyways, so here we are with Caleb and Jacqueline and with Rod. So thanks for joining us. And before I turn it over to those two, though, I'm going to talk a little bit about PFI and our Farminar series. So we've got two more topics coming up. March 6th, next Tuesday night, the topic is planter technology for cash crops and cover crops. And then the final Farminar of the season on March 13th is direct marketing at Seven Sons Farm, which is a diversified livestock farm that does just a fantastic job with their marketing online specifically. And we've got one of the Seven Sons, Brooks, going to lead a presentation on March 13th about their marketing strategies. So if you're interested in livestock insurance, you might also be interested in direct marketing for a diversified livestock farm. So mark your calendar for that date. If you ever miss a Farminar, we record all of these. Last Tuesday night was our 150th Farminar. So tonight is 151, and they're all in our archives. So go dig through those. A little bit about Practical Farmers of Iowa. We've been around for more than 30 years. We are a member-based organization. We're very proud to be farmer-led. We're a big tent. We welcome farmers from all enterprises, is what that means, and farms of all sizes. So yeah, tonight's on livestock insurance. Next week is on managing your planter settings for row crop production. The other week we had permaculture and farming solo, and we've had woody ornamentals. We provide programming for whatever our members are interested in. So a diverse organization. We're very proud of that. And our mission at Practical Farmers of Iowa is equipping farmers to build resilient farms and communities. And we do this with farmer-led investigation and information sharing. And this is a great example of information sharing. The other activities that we do to achieve our mission at Practical Farmers of Iowa is, along with that farmer-led investigation, that's our on-farm research portion, the information sharing comes out in these Farminars. We do that also through on-farm field days. And you can see that map right there shows the first round of on-farm field days that we've announced for this spring. These are all going to be cover crop field days, cover crop, in your row crop production, and then cover crop and grazing topics are all lined up. So in those 6 field days, mark your calendars for those. If there's anything near you, please join us. We will be announcing our big summer field day season a little bit closer towards May, and that'll be on a whole diversity of topics lasting from about May through November. So keep your eyes peeled for that. We also do workshops and socials. These Farminars are a great example of our farmer-to-farmer education, so plug into PFI whenever you can. Check our website for any details on upcoming events and activities. Of course, we're a member-based organization, so I'd really like to ask you to join us and become a member if you're not already. There are loads of member perks. This time of year, our email discussion lists are pretty active. Like I mentioned earlier, a couple months ago, Caleb and Jacqueline posted on our discussion list about their issue trying to find insurance for their young livestock farm, and had several leads from other members. That's pretty common for PFI members to want to share their knowledge with each other and help each other get going. But aside from our email discussion list, you get discounts to our events, you get our quarterly newsletter, and you get to participate in our on-farm research, our beginning farmer programs. But really, you'll be supporting Practical Farmers of Iowa and joining a group of people who want to help each other improve their stewardship and improve their efficiency and improve their profitability. So I want to encourage you to look into membership with Practical Farmers of Iowa and plug in with our network. So a few rules before we get really started here. It looks like everybody here is sharing in the chat box where they're from. That's fun to see. So that chat box is where we want you to ask your questions. Be thinking of your questions for Caleb and Jacqueline and Rod, and type those in as we go. Try and keep it a little bit on topic because we are going to cover some ground. So chances are, if it's on an insurance topic, we might be covering that a little bit later in the evening. But we do have time at the end after both presentations for all other questions. So pop your questions in the chat box. If they don't see it, if it's not relevant, we'll get to it later. Don't worry that we're going to miss out on that. Also, if you haven't noticed, in that bottom left corner, very bottom left corner of your screen is a little poll that asks how many people are watching from your screen. That helps PFI get a more accurate head count of how many people we reach with these Farminars. So do check that box in the poll about how many people are watching from your computer. One other thing I want to note is that there is a survey that we have for some feedback on tonight's presentation. That's also your chance to tell us what topics you want to hear about in the future. As a farmer-led, member-based organization, we take your suggestions on topics and content that you want to hear about really seriously. So take that survey, let us know if you learned something tonight, and let us know what you want to hear about in the future. Also, if you take that survey, you get a chance to win a free PFI hat or shirt or some kind of fun swag. Let me see, I think if you want to sign up on our Farminar email list, there's a link there on that screen as well. I think that's all I've got to cover right now. So first off tonight is going to be Caleb and Jacqueline. They're going to talk about the process they went through trying to figure out what insurance will be a good fit for them, and then we're going to hear from Rod from the Risk Management Agency about what you need to consider when choosing livestock crop insurance. So thanks to everyone for joining us, and Caleb and Jacqueline are going to take it over.
All right, good evening. Thanks, Steve. Jaclyn and I should introduce. I'm Caleb, my wife Jaclyn. She's going to present most of the presentation tonight since she did most of the hard work. I'll do the intro here. We're just starting off as a farm, and nice introduction here to show that why we do this. So kind of the agenda a little bit. We're going to go over our farm. We're L4 Farms. Then we're going to cover the insurance, why we started looking, what we went through, choosing the right fit, and then we're going to wrap up kind of some of the pointers that we've seen and some improvements that we would hope to see or like to see within kind of the industry for smaller farmers and beginning farmers. All right, so we're L4 Farms. Jaclyn and I, with our 5 children, ages 12 all the way down to the little one who just turned 1. We started farming here in Osceola 2014. We're both working. I have a full-time job. Jaclyn works, well, full-time with the kids and then part-time outside. And then also I have another part-time job outside as well. Um, the kids keep us busy. The farm is, I guess, the best playground the kids could have, on top of actually learning some good skills. What we do, we have pasture and some corn-fed beeves. We raise hogs, broilers, eggs, rabbits. We do our home garden to help sustain and offset the food cost. Some berries, fruit, nut trees, and then we have some bees. The best thing is here we're always learning and adding things, trying things. The kids are now getting into 4-H, so they have some really great ideas that may or may not work, but they're very eager to start with. And then sometimes it lasts long enough that we might add it into the business a little bit. So 4-H animals give us that little bit of experience of different things in small numbers.
So what Caleb said here is the larger animals are basics that we are selling. If we get to the point where we can sell the rest, that'd be great, but most of the berries and greens and garden stuff is for us, and the trees as well. The reason we started looking is because we used to have Farm Bureau insurance. And I grew up, my parents always had Farm Bureau. They were the trustworthy, the standard, I guess. So when we decided to go into farming, we're like, yep, we need to be Farm Bureau members. We need to have Farm Bureau insurance. It worked out okay until we lost a cow. And it was the middle of the summer, and I knew we have a really bad coyote problem around. And since we had, I think, a couple chickens at that point, not very many, but we didn't want to lose them, so we went ahead and buried the cow. And I don't remember if it was a weekday or not, but I called the insurance the next day, and they said, well, did you have the vet out? And part of that was our lack of knowledge, that we didn't realize we had to have the vet come. But so we didn't have any coverage for losing that cow. And she was our first, just trying to figure out what we wanted to do. And then after this summer, and we realized everything jumped up, I'm like, hey, we're selling eggs. Do you cover that? And the agent said, well, I think we do under a farmer's market rider. I think. And I was really hesitant because he had come out and he had measured buildings and he knew what we had out here when we started, but he never called back to see, well, what else are you doing? And whenever I went in there, it didn't seem like they wanted to spend a whole lot of time with us to understand what was going on. Since we are newly established, we're still trying multiple venues, multiple products to say, okay, this we're good at, this we're not so good at, we want to continue this or improve this. So as we're trying to find our feet, we just want to make sure that we are covered no matter what we do. And for them, covering us as a business was mostly a vehicle that we use for the farm. If we deliver our products, that would be a commercial vehicle. Other than that, they really didn't understand what we were doing or why we were doing it. The rates did jump up. Part of that was because I needed the auto insurance, and it was Friday afternoon, and the office was closed, and they didn't have a number for me to call, and the vehicle was locked, so I couldn't unlock it and get the number to call. So I was really disappointed in their customer service, and my thought was, well, if they're doing this for an auto claim, or it wasn't even going to be a claim, so what would they actually do for our farm? And that's what prompted the email for the listserv. And we got 9 different insurance companies. And it was really interesting to get some of that feedback because, like Woven Strong Farms, they came back and said, hey, we went through the exact same thing. We were with a company that we just didn't feel got us and got what we were trying to do. And they ended up with Grinnell Mutual, who came out and walked through their place, walk through what their expectations were, where they were planning to expand, and really fit them. For us, Grinnell Mutual just really isn't down in this area, and when I tried to find the nearest one, it didn't really seem like they wanted our business or wanted to understand what we were doing. So we wanted, as we got, I think, 5 or 6 different quotes, we went through delivering products versus picking them up on the farm versus no one setting foot on the farm. We were asked all these questions. Well, will they be on the farm? If so, in what capacity? Umbrella coverage for the liability. Also actual value versus replacement. So we bought a farm that the couple before us had lived here for 35 years, and they maintained things when it was going to fall down. So we have a 60 by 80 machine shed that we have some stalls in it, we have the office in, but we put a brand new roof on, we fixed a bunch of stuff, we're fixing doors, and it's listed as actual value. So that's with the depreciation. And when I said, okay, this thing's going to burn down tomorrow, how much money would you give us to rebuild? Since it is actual value, since it's older than 30 years old. And I could never get a number. Like, they could put a value on it, but they could never say, well, you'll get $12,000 because of the depreciation. And when we're putting this building back up, when we had gotten some other figures from people, they were talking close to $70,000. And granted, that's with cement and everything. But where I couldn't get numbers out of people, that's really frustrating to me, because I want to make sure that I am covered, to know in case of a catastrophe, we have the wherewithal to actually replace it, since it is our main outside building. And then also what we have to do to qualify. So with the lightning, with the one cow, we didn't know that we had to call the vet. So that was lack of information on our part, but it was also something that when the agent sold us the insurance, he didn't say, well, you're only covered for lightning and flood. We live on top of a hill, so flooding is never going to happen unless if Noah needs another ark. So, that really wasn't justifying the expense to us that we paid for livestock insurance for 2 years, but we only had the 2 coverages. And then with getting so many different quotes, we had one agent quote us for replacement cost on the shed and another quote us for actual value. And those numbers were even different, and how much they were charging for those numbers. I mean, we were having a hard time getting things to line up and to make sense for us. Why is it this much through this agent, and why is it this much through a different agent? And would we be covered at the same level? So then with that, going through so many different agents, we bundled our auto together with our farm and liability. And different agents would write different minimums. So with the auto, we were at like 100,000, 300,000. And the first guy we talked to said, I don't do that. I write $500,000 minimums. So 500,000, 500,000. And that sounds really nice, but you also pay for it. So determining how much coverage we were willing to pay for and how much we thought we needed was something that was really important to us, figuring out, okay, this sounds great, but can we afford it? Because between the insurance and the taxes, which we found out through our mortgage, we have to escrow. We cannot just pay it. So that made a difference when we were talking about the paid in full discounts. And that was always a question, okay, do you want it paid in full? Is it 6 months? How much of a difference in price would it be if we did monthly payments along those lines? So I actually set up a spreadsheet comparing and contrasting each one's coverages versus in cost. And Caleb, every time he's like, what are you doing? Because I'm definitely one that I want to know I'm covered, but I don't want to spend our entire budget on it. Okay, so for us, was definitely cost to get the biggest value for our buck. And then also making sure that when we're selling eggs, we're covered. Our current policy now has a recall. So if something were to happen, we could get the recall coverage to pay for that, as well as lost revenue. Butcher animals, we let them know that yes, we're taking them into the locker. And one thing we had, we were getting ready to take one in, and as we were loading it, it's a black cow. We found out that it had an abscess right next to the tail. With the winter, we just missed it, and we didn't take it in. We're doctoring it, and it'll go to the sale barn. But I called the insurance, and I said, okay, so the locker can condemn a carcass. Would we be covered if, for some reason, something happened that we either missed or didn't even know about, and they condemned it? Would that be covered? And so it was reassuring to know that yes, with the plan that you have, you would be covered. Since we are trying to do as much as we can for ourselves, we also have solar panels, hence why we put the new roof on the shed. And we wanted to make sure that the solar panels were covered, and that involves some checking on the agent's part, but now it is covered. And then the liability. We live right on a highway, so if the cows would go through the fence, hopefully not, but if they did, to make sure we had enough to cover anything possible. And so that led to the liability. We carry $1 million. Trying to think if there's anything else tied into the liability. That was the biggest thing for us, just to make sure we're covered in general. After my experience of not being able to get a hold of the insurance company on that Friday afternoon, and it was like 3 o'clock in the afternoon, being able to know that I'm going to be able to talk to someone. That is my biggest with the customer service, and ensuring that they know what we're doing, what our goals are, if we're going to expand, if we want to go in a completely different direction, because Caleb has been playing with aquaponics, sorry. I always get that wrong. And, if we add that, is that going to be covered? And that was something our agent said, yes, that will be covered. And actually, they were the ones at the PFI conference, the American National. And it was just really nice knowing that they weren't looking for the traditional corn and soybean farms. Knowing that they made the trip, which for them was a pretty long trip, to come see the place, sit down with us. I think they were here 2.5 hours, and plus the drive time. That was probably at least a 4-hour day for them, to see what we're dealing with and what our expectations are. Wish we knew the ordinances and laws.
So I kind of put that in there because what we wish we knew. Okay, is it required as a business to have coverage while transporting animals, or do we have to have coverage for certain things, or a mandatory coverage if we take animals to the locker? I know the locker would cover it from when they butcher it on, but if something happens, they do a recall and it's not covered there. Is there anything there? Just other little things like that farmers market. There's any ordinances or laws that maybe the area requires. On-farm stand, direct sales from the farm.
And part of that is just additional information that we need to look up, and part of it is, I think, being helpful, or it is helpful when your agent deals with more people like that, because then they can lead you in the direction of, okay, this happened to a different person and they were covered, or then we had to write it differently. When we were with Farm Bureau, it was definitely the traditional farming, and they didn't quite know what to make of us and what we were trying to do. What I would like to see improved in the industry is replacement value on buildings older than 30 years. And maybe this doesn't make sense financially, I don't know, but where we intend to keep this building and replace it if anything were to happen, I would really like to be able to get replacement value, even though it is older than 30 years. Granted, they said at one point that if it can be shown that it's above average condition, then they could do the replacement value. But I guess we should have painted the barn first, or the shed, before they took pictures, because at one point when we bought the place, they had like this mildew stuff that's on the outside. So it looks bad, but it's all in good condition. We just haven't gotten to power wash it off yet. Clarify and the definitions about what coverages are. Definitely the livestock portion. For us, when we bought the original livestock insurance, we thought we were covered across the board. One ended up getting sick at one point, and even after all the doctoring, we lost it. And so we called it in. They're like, nope, we only cover lightning and drowning. So that was the final straw there. And now, I don't know if it was just that they didn't want to work with us or didn't understand, but we have a lot more coverages. The broad perils we got from a different company was different than the one that we have now. Like, it's really written out for American National what is covered, and for us, it made a lot more sense. So there was a question that the condemned and weren't insured through Farm Bureau, that they only cover lightning. Yes, we're through American National, and I was just really impressed with them. Because honestly, like Steve said, this has been going on for months. By the time the conference came around, I just wanted to be done. It was very hard to keep up the motivation to say, hey, we're going to get the best coverage, the best deal for us. After looking through so many and talking to so many people, I was glad that American National was at the PFI conference, because our coverage would have been okay, but what we have now is just so much better for what we're trying to do. And I am confident that if we got into trouble, they'd say, hey, this is what's going on. Or if we give them a call and say, hey, we want to add this, they would be really helpful and really willing to work with us. My favorite line from while they were here, they're like, yep, after seeing all the revenue streams, there's nothing here that scares me. And that was when we mentioned the aquaponics even. So, I don't know. I laughed at the time, but sitting here thinking, okay, they were very confident. They knew what they were doing, and they got what we were doing. So that was really good for me. I think that was the last one. So if you have any other questions, feel free, and we'll just answer them as they come.
Great. Yeah, I was going to say we do have some time here real quick if somebody's got questions for Caleb and Jaclyn before we move on. Good question, Chad. Yeah, so if that wasn't clear, Caleb and Jaclyn still, at the time that we held our PFI conference just about a month ago, we're still, on their insurance hunt, and American National is one of the exhibitors that was there. And I don't know, Caleb, if you want to mention the story that you told me. I thought that was kind of funny how you struck up a conversation. But then they ended up coming out and you guys worked something out. And could you mention also in that American National relationship, are they now are you bundled with them through everything, or is that just for certain things and you kept Farm Bureau for other things, or could you explain that?
Nope. So I'll start in reverse of the question. So yes, we bundled everything with them. So we have home, farm,
And
animals, liability, and auto through them. So you save a little bit more when you bundle, but since they were so willing to come, they were the liability, the farm, explaining different things, showing us different things, and then the coverage that they had. It also made sense to bring in the vehicles and the home with it too.
And when we ask for the paid in full discount, because I do try to get all the discounts we can, they will work with the escrow we had two other companies who said, no, you, for the paid in full discount, you have to pay it, and then you have to get it back from your insurance company. And when I called our mortgage company, when I called them, they're like, well, yeah, we could try to get it back. And they're like, but otherwise you'd have a review and or audit come November, and then if you overpaid, they'd give it back. And when you're talking $3,000, I'm sitting here, I don't want to wait 3 months, or I guess it'd be closer to 9 months before getting to utilize our money just for the paid in full discount. So American National said, nope, that's all. We will take care of that. Just let me know the name and number and we'll do it all. And they did. It was really easy. We did not have to bundle everything. It just was a better discount when we did that. Actually, once I had trouble with autos that I couldn't get a hold of them, I canceled my insurance policy, the auto part, with Farm Bureau the next Monday. We had a really great auto insurance through our bank that works with military. So it was a fact that they were going to give us the customer service I needed, because 5 kids on the side of the road just is not something I want to experience. So my goal is to always have really good auto insurance. And when I asked Maureen with American National, she's like, oh no, you will either get me or somebody, someone always has their phone on them, and we will help you out no matter what time, no matter weekend, weekday, whatever. Maureen Eckhart is our agent. And the one thing that we hadn't had coverage in the past was everything in our shop. So for the price that we were paying before, I think we paid an extra $300, and now we have liability, we have our tractor covered, we have all of our tools covered.
Solar is now covered.
Yep, the solar panels are covered, and they just wrote that as part of it. And I was really nervous when we were saying all this, and they're like, oh, we can do this, we can do that. I'm like, oh, I see the numbers racking up here, and that just wasn't the case. So granted, we've only had them for about 3 weeks, but we're very happy so far just with the communication and what we're getting.
Yeah, and like Steve mentioned, how I met them, I was doing the traditional husband thing. I was standing outside the women's restroom holding my wife's purse, waiting for her. So I was just sitting there and I just saw the American National Insurance kind of booth, and I just meandered over there to kind of see what they were looking at. We were grudgingly looking around just to see, and a couple of their handouts had everything we were looking for, and struck up a conversation, and it actually ended up being a mother of one of the ladies I was working with. So it ended up working out very, very well for us. Jaclyn is going to go ahead and put in our agent's name in the chat box, so that way if some of the local people would like to contact them or get some more information.
Great. Thank you for sharing, you guys' experience. I'm glad that you ended up finding something you're happy with in the end. So Rod Sebastian's here now, and I'm going to pull up Rod's presentation, and he's going to go through a lot of the details that are important to consider when you're looking at risk management for a livestock farm. And then Rod, there's a question there too from Eric that asks, I don't know if you're able to answer this or if Caleb and Jacqueline are, but he says that Eric thought at one time he was told that insurance needs to be under one insurance company for house and car and etc. Is that something that's true?
That's not within the realm of what I work with crop insurance, but from my personal side of things, no, it's not true, at least here in Minnesota. And I know that each state has its own kind of insurance regulatory system, so there could be some variation from state to state, but at least here in Minnesota, I know you don't have to have the same company to bundle everything together, although there are as Caleb mentioned, there is advantages for discounts and that can come with bundling.
Yep. All right. Thank you, Rod. Yeah, and so Caleb and Jacqueline will stick around, and Rod's going to talk about the risk management options here, and we'll have time for questions for all three of our presenters after a little bit. So stay tuned.
Okay. Well, good evening, everyone. Thank you for the opportunity to be able to talk a little bit about some of the risk management agency programs for livestock. It's somewhat of a new element that the agency has been delving into in the last 15 or so years. And like Steve said, I was to be at the PFI conference in Ames last month, and believe me, it was a little disappointing not to be able to come to that, since I'm an Iowa State grad and I'm always looking forward to getting back to Ames. But now this is, I guess, a good opportunity to make that up a little bit. I will be trying to provide some of the basics on several risk management options that are available through USDA Risk Management Agency that are designed specifically for livestock producers. Traditionally, our business has been crop insurance, and we're operating in almost every state with crop insurance, and now most of our livestock policies have also been expanded into most of the U.S. as well. We have two general types of insurance policies that are available for 2018, and what they generally are is we have a margin product where the protection is against reductions in margin between the market value of the livestock and feed costs, and the other one being just livestock risk protection, where it's just simple protection against price declines in the market. And as I mentioned before, all LGM and LRP insurance plans are available to producers in Iowa and all surrounding states. So that should not be a problem for people interested in getting livestock protection. One of the things I like to talk about in terms of how these work, and talk about it in a way that I don't get too far into the weeds with this either, but what we've found from experience is that the underlying driver for both LGM and LRP prices and premium comes from the futures market trade at the Chicago Merc. Futures contracts are used to determine expected prices down the road and actual ending values for the end of insurance period. Options trade is where we get a feel for what the premium should be. In essence, when you buy an option on the futures contract, it is like an insurance premium, and so it does relate quite well to establishing how much or how little you need to pay in premium for your policy. And why CME futures? What's nice about the Chicago Merc futures is that the commodity prices at the close of each day's trade, they reflect the collective expectations of many buyers and sellers. Buyers and sellers represent different business interests in the commodities being traded. They're standardized contracts where everyone knows the quantity and quality, and futures market prices are published. They're public information available to anyone through several different means. So there's a high degree of transparency involved there. So how is LGM and LRP different from futures trade on the Merc? With the, especially with LGM, there's a bundling of multiple future contracts and positions into one insurance period, or one endorsement that you use to insure livestock over a period of time. These endorsements cover only the expected livestock numbers or 100 weights of milk that you will be marketing on your own farm. So you don't have to worry about either over insuring or under insuring, or in the case of futures market, if you don't have enough cattle to sell that would match the standardized contract at the Merc, you would find yourself in a speculatory position. And that's definitely not something your banker would be happy with. And then lastly, you have opportunity to select coverage levels that fit your risk profile. Now, what these two different types of risk protection are available for is with LGM, we have one for cattle, and that's based on the difference between live and feeder cattle contracts and corn futures contracts. We have one for dairy. It's based on the difference between the Class 3 milk futures and corn futures contract. And lastly, we have swine. It's based on the difference between the lean hog and corn and soybean meal futures contracts. With LRP, as I said before, this is just a simpler product where you're just insuring against declines in the market value of the livestock. And I'm not going too far into the weeds here. Just a quick summary. Feeder cattle is based on the feeder cattle futures, and fed cattle is on the live futures, and swine is on lean hog futures. The difference from all of these with the lamb is there is no futures contract available for trying to establish what the value of lambs would be down the road at the time that you would be marketing these animals. And so they use a spot market price as a means of modeling to, I guess, project what the livestock would be worth at some future time. Once the expected values are established, people buy their endorsements to cover their livestock for whatever period of time they need. And at the end of insurance, there is an actual ending value that is based on these different reports here. I won't go into the detail on that, but this information then is posted for making the calculations between expected values, actual values, and then determining whether or not there would be an indemnity associated with that. And this is kind of a little reiteration of what I talked about near the front of my presentation, but some of the pros of LGM LRP is that endorsements do bundle multiple futures contract positions. It ensures you can insure specific livestock numbers or milk hundredweights to match your expected marketings. And as I said before, it's a way of avoiding over or under insuring. And you can establish multiple market months to match the timing of your sales of livestock. And then kind of the additional benefit that is not readily available with futures markets is that you can select a coverage level that fits your risk profile. Kind of like crop insurance, where when you get a policy for your different crops, you would pick some coverage level between like 50% and 85% of the guaranteed value of the crop. Cons. And my first one is one I'd always heard about for a number of years, and lo and behold, last week things changed. An informational memorandum, there we go, it's getting late, memorandum was put out that removed the $20 million underwriting capacity limit that was available for each fiscal year. And what that means is that prior to this change, if underwriting capacity is utilized up to $20 million, sales of all livestock risk protection products are cut off. And I know this was very frustrating to different people at different times, and we would get calls from agents and farmers who had everything inputted into buying an endorsement, and they are ready to enter. When the sales period opens, they hit enter, and they're already locked out. And it was kind of frustrating. And then also, there are from time to time periodic suspensions of sales due to unforeseen or extraordinary events that do interfere with program function. And best example I can think of is, how many of you remember Mad Cow? I was watching the news the night that that first came out and really hadn't thought too much about the implications. And next thing you know, a large cattle feeder from my stomping ground in Northwest Iowa was calling my home with his crop insurance agent saying, "We're trying to buy this LRP for fed cattle. I can't get in. What's going on?" And believe me, the next day was pretty chaotic, but it's really an issue of avoiding adverse selection. And I kind of equate that to, it's like buying auto insurance after crashing your car. And lastly would be the lack of underlying futures trade to support LRP lamb. And from time to time, we've had to pull that particular product back because it just wasn't actuarially sound. And the losses were piling up to such an extent that it just wasn't going to be a sustainable product. I thought I would kind of wrap this whole thing up with just a little bit of what we've observed over the last 15 years with LGM, LRP, and I'll focus just on Iowa, where during the last 15 years, 73% of the total liability or guaranteed value of the livestock was involved with the LGM policies. And in terms of different types of livestock, the swine product accounted for about 60% of total liability or total livestock value over the 15-year period, followed by cattle and then dairy, with lamb coming in at about 1%. I'll just point out one number here really that is truly interesting. In the crop insurance business, we use a product that has actuarially sound function to it as something that over time will have a loss ratio somewhere around excuse me, phone shouldn't ring at times like this. Sorry, but okay. Yeah, over time you want to have insurance products that are running with a loss ratio somewhere around 1. And Sorry again, persistent caller. Um, and for Iowa, over the last 15 years, we're 0.95, which I think is indicative of some pretty decent success with how these programs are working. And um, so, yeah, I think that we're learning a lot as we go down the road with these products, and we'll probably keep tweaking them and making improvements as we go. Loss ratios from year to year, they do change dramatically, just like with most other commodities. You have your better years and worse years depending on weather and things like that, but market prices have been quite volatile over the last several years for sure, and that's representative here in our annual loss ratios, where we're seeing some years we're down around 0.25 and as high as 2.5. But like I said, the long-term target is somewhere around 1%. And for additional information, you can check out these different sources for policy, for actuarials, and we also have a livestock agent locator on our public website. And in addition to that, we do have office email for St. Paul Regional Office, as well as my own email, where you may contact me with questions or other staff in our office as well. And again, I would encourage you to definitely check out our RMA website. There are a number of fact sheets, FAQs, and also you can even check out some of the livestock reports that we'll have. They'll give you a feel for what were expected values set early on, and then how did that end up in terms of actual ending values and whether or not there was an indemnity. So with that, that's information I wanted to present. Hopefully I didn't wander into the weeds too far with this.
That was great, Rod. Thank you. Yeah, so we've got time to open it up for questions for Rod, or if you've got questions yet for Caleb and Jaclyn, please get them in the chat box. So Rod, I guess this is a new topic that I'm not really familiar with, so forgive me if this is if you mentioned this or if this is really basic, but some of these products that you were talking about, and I saw that the last slide you were on had an agent locator. Is that are there private insurance companies that are able to sell and use these programs, or is this just through the USDA? How does that work?
Okay, that's a really good question. And I guess it brings up an interesting point too in how RMA functions as a federal agency. We have a total of probably about 450 people across the entire country, and we do all the underwriting, product development, actuarial work, and that sort of thing. But we have this partnership with private insurance companies. So we're the only federal agency that has a public-private relationship that's as extensive as what it is with crop insurance. And like I said, we have about 450 with our agency, and I believe there are 15,000 agents out there selling and servicing crop insurance policies. And a number of those agents are certified to sell the livestock products.
Okay, yeah, interesting. Thanks for clarifying. Yeah, and I saw Kathy's question in the chat box there that, she had asked, because you were talking about dairy, cattle, swine, and sheep or lamb, and then she had asked about goats. So you're saying no on goats, the goats are not an option to be insured, or they're not treated the same as lamb. Could you elaborate on that?
Okay. Yes, I can. Going back to, okay. On this particular slide, where I have the actual ending values for each of the different livestock, the lamb is based on actual ending value for lamb is based on a simple moving average from the Ag Marketing Service National Weekly Slaughter Sheep Review. And it kind of boils down to how equivalent, similar or dissimilar, are the species. And I'm pretty sure that goats don't quite fit the criteria of what is being reported in the Slaughter Sheep Review. That being said, kind of like what the experience for Caleb and Jacqueline has been, there is another product called Whole Farm Revenue that's offered through RMA, and that doesn't have specific criteria for a species of animal or a type of crop per se. It's based on changes in your farm revenue over your whole farm, and that's definitely something that can be checked into for producers that may not have some of the traditional types of livestock or crops that you think are typical on a farm.
Thank you for mentioning that. That it's something I forgot to put in our presentation, that our livestock value is different than what the regular market price is. So we get a higher price per pound than what we would if we just take it to the sale barn. So what Maureen did, she sat down and said, okay, how much is your livestock worth, everything on the farm? And that is what our coverage is based off of. So our animals are worth more than, say, my mom and dad's, who's a regular feedlot type farm. And since we are 100% covered, they will cover everything for us. And when I say that, all of our animals are covered. That was my biggest question when I looked at our policy that American National wrote for us. They had something in there like denying coverage for something, and it really confused me because, you know, I'm signing up for this and I see this denying of coverage, and they treat it differently if you only cover, say, 80% of your animal value. So in our case, I think ours is almost $40,000. And if we would have only covered, say, $30,000 of that value, then they would have treated it differently. And I can't remember exactly what she said. It made sense when she did, but I forgot what she said because we are covering it 100%. I think it's in how they pay out, because they can't prove, well, that animal that you lost is actually part of the 70% that you have covered versus it's not.
Mm-hmm.
So if you are not covering 100%, that is something to check into and clarify. For us, we didn't need it, but you might want that.
Mm-hmm. Yes, and I believe Caleb and Jacqueline have been really doing diligence as far as trying to say, okay, our operation's just a little different. For example, Jacqueline talked about the value of their cattle. And, you know, they're not sold through the typical marketing channel, and so it's just a different scenario, and sometimes your traditional insurance products may not fit real well. And to their credit, I thought that was commendable that they were able to find a policy that really fit the nature of their operation.
Yeah, and I think Caleb and Jacqueline have an experience that a lot of PFI members do because they are on a different scale or they have niche products, and so um, we appreciate hearing everyone's experience with that. I did just post a link in the chat box there from a Farminar that we held a couple years ago that was on whole farm revenue protection. So that's a good overview about how that product works, and that's a good option for those who have diversified farms and kind of non-traditional products and things to look at there.
Yes, and in addition to the resources on the PFI website too, there will also be information on the RMA website, FAQs and fact sheets on whole farm for those that would be interested.
Yeah, I'm gonna go back to, yeah, I think this is, here we go. There's some links there that Rod shared. We do have time for more questions though, so please get them in there if you've got a question for how Caleb and Jacqueline, you know, got to where they're at now, or for Rod about how any of those risk management insurance products work. Now's the time to get them in the chat box. My question for Caleb and Jacqueline, while we've got the time, is about, I know you guys, so you had mentioned that you talked to your insurance agent, your new insurance agent, briefly about the aquaponics venture that you were going to do, and I know you guys have, you know, some ideas of diversifying further, even more than you are already. So, did and then also in relation to the livestock and uh, the enterprises that you currently have, and the markets that you currently use, how much did you talk about the future of your farm, I guess, with your insurance agent, and talk about like what they could do for what you had in mind later?
So the big thing was when they sat down with us, we covered everything we were doing and what we thought about doing. Some of it of thinking about doing or expanding or going into is already covered. But if we do any drastic changes, say like add a hoop out or an commercial size aquaponics system in, and we start selling directly to grocers and stuff, then we'd have to reevaluate. But putting in the size that we're going to, that's mostly just going to be able to hopefully keep our kids fed and keep it affordable because our kids are starting to go through pounds of vegetables. So right now we're covered on that. But if we want to expand beyond that, then we'd sit down with Marine again and reevaluate and see if there's anything additional we would need or just adjust.
We basically planned for it to cover us for 2 years and then making it so that we did have to go back and reevaluate after that 2 year mark. When they say the yearly insurance check, after this year, we wanted to skip that extra year, but we really wanted to stick with double checking every couple years. And by only adding enough to cover what's in the short-term plan, that ensures that we will go back and double check.
Okay, yeah, great. Thank you for clarifying that. I've been waiting here for seeing some more questions in the chat box. I'm sure somebody, Chad, you had some good questions earlier. Maybe Chad, Marin Beard, I'm just going to call out the people that I know that are tuning in here. Maybe you've got something specific to your farm that you can ask about. Nothing's off limits, but we are going to wrap it up here if there's nothing that we've got to ask Caleb and Jacqueline and Rod about. Rod, is there anything else to mention or cover that we haven't yet on your end?
I just did post the link for the whole farm revenue.
Right. Good. I'm glad at least Chad and Marin are listening. Um, cool. Well, I mean, we've got a lot of details in this Farminar, so um, again, last chance to pop some questions in here, but I'm not going to keep everybody around if we've covered all our bases. So I'm going to go ahead and say one more time that if you didn't hear me in the when we started, that we do PFI very much values everyone's feedback. And so I'm posting that link in the chat box right now to give us a little bit of feedback about tonight's presentation, and that's your chance to let us know what topics you want to hear about in the future. So hopefully you gained something out of tonight's Farminar, and hopefully you'll join us again on another Tuesday night. We've got 2 more weeks in this Farminar season before we call it quits until November. So join us. Like I said, in 2 weeks we've got another one that's direct marketing for a diversified livestock farm, and they are it's called Seven Sons Farm. They're in the Chicago area. They do a great job with their direct marketing. So join us in 2 weeks for that. But unless Caleb and Jaclyn, is there anything else you'd like to add here before we wrap this up?
Just a little bit. Make sure you do your homework. I know it sounds like a lot of pain just listening to us talk about our process, but don't be afraid to tell the insurance people what you want. You're the customer, and they're supposed to be providing a service. So saying, "Hey, I want this covered," and if they say they can't, there's probably somebody that can. Now, whether or not you pay for it, that's another story. But keep going.
And don't hesitate to ask questions. So there were 4 insurance agents I probably called a minimum of 4 times. I did not go into their offices because I'd have to drag all my kids with me. And I was very specific on my questions of, okay, you have our house valued at this, but this insurance agency had it valued at that. Can you explain to me why? Where are you getting your valuations? How often will you go back and review what our farm is worth? Because especially here in Clark County, our taxes seem to be going up every year, so our values seem to be going up every year. And we did remodel our house, so we wanted to make sure that with the remodeling, we still had the replacement value. So there was a lot of back and forth questions, whether it's you're more comfortable with email, phone calls, seeing them face to face, whatever works for you, but don't hesitate to say, hey, you wrote this coverage and I don't want that much, I want more, or can we tailor it? Because sometimes when I ask, well, I don't like these numbers, I don't think our house is worth that, or I don't want to pay for the removal process because we're out in the country and we can burn the wood from the house and so on. And they're like, well, no, we cannot change that on one of them that we did not go with. But when you're talking $13,000 for destruction and removal, and Caleb and I are used to doing everything on our own as minimal expense as possible, we're like, we can put in the elbow grease, we just want to rebuild the house. And they're like, nope, this is the minimum we can do, and yes, you have to pay for the demolition and removal. So that kind of lessened their chance of getting the sale because, that's not something we want to pay for. So just ask those questions.
Those are really great points, both of you, Caleb and Jaclyn. So you're great examples for the process that you should take when you're going through this. So thank you for sharing that. And if you too weren't so busy with not only 5 kids and practically 5 enterprises on your farm and then a handful of off-farm jobs as well, I'm sure other people would want to hire you to help find their insurance options for them, because you've done a great job. So thank you for sharing your experience. And Rod, thanks a lot for taking the time to talk with us about the RMA options here too. So big thanks to our presenters tonight, and thank you everybody for tuning in. And thank you